In this video, I'm going to go through two charts and give you an insight that you just can't unsee. We're going to look at XRP as it is right now. We're then going to compare that to Litecoin. You can see Litecoin and XRP have two very different structures. Litecoin looks like it's about to take off. XRP is looking really suppressed. Is there a leading indicator that you can use to predetermine how different charts and cryptos could move? I'll explore how you can use the world's most powerful leading indicator in this video. Make sure you watch it all the way through to the end. You're not going to want to miss this. Let's run the numbers. There are two types of indicators out there in the real world. One helps you to forecast economic activity. In this case, we're talking about price. If there's a leading indicator that we can apply to XRP's chart and Litecoin's chart, it should tell us why price is doing what it's doing. That is the only way that it can be leading. If it can't do that, it's lagging. When it comes to trading and investing, we need some kind of framework to understand if price is changing, how much and where it's going to, where the safety nets are and where the ceilings are. For an indicator to be a leading indicator and not a lagging indicator, lagging indicators just confirm existing trends. Confirmation of what has already occurred is not very helpful to us in making money. It doesn't really provide a new edge. You can see that currently XRP is down, and it's down more than the other cryptos. Why is that? A leading indicator would be able to explain why. We can see that Litecoin is outperforming XRP at the moment, but why is that? A leading indicator will be able to tell us why. Returning to XRP's chart. Recent indicative price, or RIP, which is the process of drawing up support and resistance lines just for a percentage of price, usually a very small percentage of price. Now, what do I mean by that, percentage of price? If we look across this price history, it's a little bit over 2 days, say 2.5 days. And what do we see here? Well, we can see a certain amount of resistance, of course, and you can see support. But what is the problem with this? This is called recent indicative price analysis, and it will RIP your money. Let's just bring out the trusty calculator to prove this out. Say 2.5 days. And what is that divided by? Just say 3736. Now that's a really small percentage. Let's multiply it by 100 to get it to a fraction of 1%. It's tiny. You could say it's under 1/10 of 1%. What does this mean? When you're analyzing price data using recent indicative price analysis, you are literally saying 1/10 of 1% of price behavior. I'm going to go all in and more at market on the analysis of recent indicative price. No wonder so many people get crushed. This is a really dangerous way to do things. Well, what is the solution? What indicator is statistically significant and what has been formed by a statistician? It's the CTKS method. I'm just going to pop the indicator on so you can see what's happening here. What you see are these lines. You can see some of the lines are bigger, some of the lines are skinnier. What does that mean? And you can see some are clustered and some are far away from price. This is XRP's price analysis using level 1 and level 2 standard certification of the CTKS method. This draws all of price history up and analyzes it all over those 3,700 plus days. It doesn't take 1/10 of 1% of the price action. It takes 100% of the price action. This creates a statistically significant leading indicator. Now, what is this leading indicator telling us about XRP's price? You can see it unequivocally. There is so much structural resistance. These levels are called SLs, or Stanfield levels. And the SLs, when they accumulate above price, they create a ceiling, a resistance level where it's really difficult for price to get through it. And you can see that is exactly what's happening with XRP's price. How do you interpret this leading indicator of price? If XRP gets above these levels of structural resistance. Total market structure is something very different from market structure. It sounds pretty similar, but it couldn't be more different. Total market structure, or CTKS structure, is the confluence of all of these lines. A lot of people, when they get into the markets, and I've been in the markets for nearly 40 years, wow, 4 decades, I'm getting old, but the concept is if you've got a lot of structural overhead resistance, it's going to be hard for price to get through it. We've seen that repeatedly on Bitcoin. Bitcoin was rallying hard a couple of weeks ago and then just petered out. Why did it stop? Because it hit structural resistance. We knew about that, but other people didn't. They thought Bitcoin would just go to the moon. It can't go to the moon if it's under heavy structural resistance. This is exactly why knowing the structural resistance on your chart is incredibly important. For example, if you're like the majority of people and you don't know where the structure is, you would just look at a chart like this and say, oh, I don't get it. What's going on with XRP? And then you'd look at something like Litecoin and just say, oh, I don't get it either. Why is Litecoin going up and XRP is going nowhere? The answer is really, really simple. It's CTKS structure. Let's pop on the indicator for Litecoin. Now, what do we see? We see something completely different. Wow, look at Litecoin. Litecoin has gotten above all of that structural resistance. It's come back and reconfirmed it as structural support. And look at this, it's starting to gather momentum. Why is it gathering momentum? You can see that there's so much structural support now underneath Litecoin's price. It's reconfirmed this structural support level as well, like it reconfirmed these levels down here. Where is the target? Where is Litecoin going to next? Well, it's coming up to 73.35. This is literally X-ray vision inside financial markets. There's nothing like this methodology. It's the world's most powerful smart money buy and sell level detection system, and it is a leading indicator of price. If you would like to get the same X-ray vision as you see on the channel each and every day, you can come across to ctksmethod.org and you can get the Litecoin indicator, you can get the XRP indicator, and a wide variety of others to overlay on your TradingView chart, just like what I do every single day. These indicators will give you a leading indicator status outlook on the markets, the stock market, Forex, commodities, and crypto. They are incredibly powerful. They're not lagging indicators. Lagging indicators are something else. They just confirm trends. They just say you were here, but you say, I already know that. What you really want to know is where the heck is price going? Is it literally going to the moon, or is it stuck under massive structural resistance? And we can see XRP is currently stuck under structural resistance, but we know from Litecoin what can happen to XRP's price momentum when it gets above. It's just going to move CTKS structure level to another CTKS structure level. That's all price does, and it moves in waves. The one thing you just don't want to do, you don't want to look at a chart and only look at the chart's recent indicative price and just mark up support and resistance levels based from that. There's a very solid reason why the majority of people lose money inside financial markets. They're taught RIP analysis first, and they think that's the way they should do things. Institutional investors and smart money never look at price in this manner. They look at market structure, total market structure. They understand that there are multiple levels of resistance, and when those multiple levels of resistance all hang out together, they form a gang that just bullies price down. Shame on you, price bullies on XRP. We love XRP. XRP to the moon. When it gets through the structural resistance, it can start to party. But until it gets through it, it's like Litecoin. If Litecoin remained under structural resistance, it wouldn't be partying right now, but it's having a party because it left all the price bullies behind. And you can see exactly what I'm talking about. When this resistance level occurs, it's a problem for price because price gets suppressed. But when Litecoin or any chart can get above it and confirm this is now support, it's like a rocket pack which is just strapped to the price. It can really rock and roll, but it depends on where the structure is, the structural resistance levels above, and how many of those there are. Every chart is different, because every chart is unique. As a former lecturer in first and second year statistics, what you will find is that when it comes to financial analysis, most of the measures you use will be statistical by nature, such as moving averages, which are measures of central tendency. Bollinger Bands are just standard deviations around an average variability. Technical analysis uses statistical measures as its foundation. The foundation of statistics is probability, so you will hear many people talking about probability. The key for us here is that we want to look at leading indicators, not lagging ones. Lagging ones can confirm a trend, but that's about as useful to you as a third leg. What you really want is you want to be able to say, where is price going? You literally want to get your telescope out and say, where could price be going? Not get your flashlight and magnifying glass out and say, where did price actually go in the past? That doesn't help you. You want to be able to understand, where is price going? Where is the structural resistance? Where are the SLs? And also take advantage of the structure of different charts. Just understanding that when we get above structural resistance and turn it into structural support, if we have a fresh air gap, we're going to be moving up to the next structural level. When you understand CTKS structure, all of these percentage variations will make so much sense to you because all of these charts are interacting with their own CTKS structure. They're simply rebounding from one structural level to another. Always be aware, don't do your analysis based on recent indicative price, just covering off a very small percentage. You don't want that. That will RIP your money. Okay, have a great weekend ahead, my friends, and Kate and I will look forward to catching up with you again tomorrow. Bye for now.